Today I'm going to talk about how you can pay less taxes and keep more money in your pocket. This video is for individual taxpayers and business owners. Let's get into it. We're going to cover deferring your income, tax loss harvesting, retirement accounts, HSA, my personal favorite, prepaid expenses, Section 179, and for people who stay till the end, I got a bonus tax strategy that can keep more money in your pocket. Deferring your income. This strategy is based on the tax method of cash basis. So income is taxed when it's received and expenses are deducted when they're paid. One way to utilize this to your advantage if you're a business owner is by invoicing your customers for a later date. This is very popular in December, where instead of invoicing customers at the end of December, business owners can invoice your customers at the beginning of January. So what this does is push the income into the next year and not the current year. Similar action for real estate. So if you are selling real estate that's expected to have a gain, you can delay the closing date to the beginning of January so that the tax that's associated with that additional gain can be dealt with next year and not this current year. Tax loss harvesting. Now this applies to stocks and crypto transactions. So for those assets that is held longer than 1 year, a sale would trigger capital tax treatment. How tax loss harvesting works is that capital losses from the sale of stocks or crypto can offset capital gains from stocks that you sold for a gain. Now this results in a lower net capital gain, which means less capital taxes. Now up to $3,000 in net losses can offset active income. So now this is in the instance that your net losses, your net capital losses exceeds your capital gains. Any net losses up to $3,000 can offset active income. So that means your W-2 income, business income, etc. Now any excess over that $3,000 will just be carried forward to offset capital gains in following years. Now, one thing to note is the wash sale rule when it relates to stocks. If you want to rebuy that stock, you have to wait at least 31 days. Otherwise, you will unravel the tax loss harvesting and remove the benefit of offsetting your capital gains. Retirement accounts. So the three main retirement accounts that's useful for individuals and businesses is the IRA, the solo 401k, as well as the SEP IRA. There's two forms of IRA accounts. There's the traditional and then there's the Roth version. Traditional is pre-tax money and the Roth is post-tax. One thing about the traditional is that you get the tax benefit today. If you have a traditional account, the strategy is to maximize your contribution so that you can get the greatest tax benefit today. Now, for the Roth IRA, you won't get a tax benefit today. However, it is still a great deal to max out your Roth, considering that the growth is tax-free. So don't miss out on tax-free growth. So make sure you max out the Roth. Now, for business owners, you can use the solo 401k or the SEP. Now, the difference between the two is mainly based on if you have employees. So the solo 401k is great for freelancers as well as solo owners with no employees. The great thing about it is that you can contribute as the employer and the employee. The SEP is really for small business owners who have less than 20 employees, where you're able to set up an IRA for each employee in your company and contribute money that way. Both the solo 401k and the SEP IRA can reduce your taxable income. One thing to note is that the account must be set up by 12/31. You don't have to contribute money by 12/31, but the account must be set up. Now, you can contribute the money in January and it will still count as the current tax year, but the account must be set up by 12/31 in order to have the tax benefit in the current year. HSA. Now, this is one of my favorite tax advantage accounts available. I like to call it the trifecta tax powerhouse because of the benefits that's associated with it. Not only are you able to contribute to the account tax-free, so whatever you contribute, you get a tax break today. The growth is tax-free and the withdrawals are tax-free as long as it's for qualified expenses, medical, health, dental. Next is prepaid next year expenses. Due to the IRS safe harbor rules, business owners are able to prepay up to 12 months of expenses without having any challenge or any issues from the IRS. Now, this strategy is very useful if you know what your taxable income is going to be. Hopefully by this time you have already talked with your tax pro or your CPA and you got an idea idea what your final tax bill will be, you can use that to your advantage and prepay for expenses that you would have incurred next year by doing it in December. You can prepay office rent, insurance, lease payments on your vehicle, software costs. The great thing about it is that you can put these expenses on the credit card to delay the cash payment till next year. That will still count as expenses incurred in current year. So if you know what your estimated taxable income is going to be, you can use this to offset that to reduce your overall taxes. Section 179. Now this tax strategy piggybacks off the previous strategy. Section 179, essentially you're able to immediately expense up to the full purchase price of select business items in the current tax year. This can be vehicles, equipment, computers, software. What's critical is that you have to use it for 50% or more for business. Now, the write-off is based on the business use percentage. So if you use it 100% for business, then you can write off 100%. 50% for business, then only 50% of the write-off is available. This strategy could be useful. Let's say you are a content creator and you want to move into the podcast space. You want to build out a brand new podcast studio. Now, with executing that idea, it comes with quite a bit of equipment. You need an audio interface, microphones, boom stands, new cameras, furniture. All of these types of assets will qualify under Section 179. And if you follow my tip from the previous slide and put it on a credit card, now you're able to delay the cash payment so that you don't have to pay all the cash today. Now, for everyone who has stuck around this long, this is one bonus strategy that I think is very beneficial for companies who have employees. You can throw a party and it can be 100% tax-free. Here's how you can do that. Now, this is something that's heavily scrutinized and you must do it the right way. Now, if you're going to throw a party, it must be an open invite for all employees. This is very critical. Now, this can include their significant others and their family members. They may not all come, but it is an open invitation. Next, you have to keep it pretty reasonable. Now, if you're a mom and pop shop or you're a smaller business, if you were to throw a party at the Ritz-Carlton, that may be too lavish and trigger some red flags. Next, it's good to have good documentation, expenses, receipts, what was the reason for the party. Now, the reason don't have to be over the top. It can be employee appreciation, relationship building, award ceremony, team building. Any of these reasons are perfectly fine for businesses for a party. One final note, I mentioned many strategies today, but understand that these must be executed by 12/31 if you want to have current year tax benefit. If not, the benefit will be next year. There you have it, strategies that can keep more money in your pocket and pay less taxes. Like the video if you find it valuable, and don't forget to subscribe to the channel for more actionable content. Take care.